I came across a survey a couple of weeks ago, which quite frankly is a disturbing read. The survey is at newyorkfed.org. Although there are a few findings from the survey, there are 3 opinions I will share with you which grabbed my attention. The survey question was quite simple. Do you think there will be a recession in 2024? Applies to America only, however, being the largest economy in the world, it matters to everyone. 3 categories which were harvested for their opinions. One was Wall Street, the second was Main Street, which is me and you, and the third was C-suite, which is the top management positions, the CEOs. 3 opinions within the categories asked caught my eye. The Fed staff, 0% of staff felt there would be a recession in 2024. Consumers, 69% felt there would be a recession in 2024. And bear in mind, consumers are responsible for 70% of the economy. Now, C-suite, and here is the shocker, 84% of CEOs felt a recession was forthcoming. 84%. That's a huge number. 0% of Fed staff felt there is not a recession on the way, despite increasing interest rates, which in turn increased debt payments, mortgages, car loan payments, credit card payments, groceries, utility costs, leisure costs. Despite the evidence that savings are being depleted at a rapid rate, despite growing evidence of a slowdown in what is still a strong jobs market, despite the average debt per household is at record highs, everything is going up, well, except SpaceX, Starship rockets, obviously. Not one dissenting voice, despite strong evidence. Yet the people who are involved with the economy, me, you, and the people that run the companies, differ hugely. Are we seeing, or more importantly, experiencing something the Fed have little knowledge of, or choosing to ignore and continue to talk up the economy, hoping to avoid a recession? Obviously, it could be the opposite, and the Fed knows something that everyone else is yet to learn. Now, 2024 is already looking very interesting. In a previous piece, I mentioned getting similar opinions out of economists is like herding cats. In the survey, 48% said yes and 52% said no. The perfect example of my point. Now, the stock market generally is forward-looking. As an example, the stock market may start to fall in the new year, reflecting the sentiment and facts about the economic outlook. However, a recession may not happen for another year, if at all. It can be as late as 18 months, however, the average is around 11. If the stock market decides to have a wobble and decline, would you know what to do? Having the skills, which is stage 2 of the investing process, to deal with the stock market in reverse can minimize your potential losses and, done correctly, give you a great potential upturn. When the markets fall, just have one thought in your mind. No, not that one, this one. Opportunity.